Welcome to Business Tips with Michael Tobian. Today's discussion is entitled, Is My Business Sellable? As a business broker, one of the unfortunate things that I sometimes have to tell a prospective client is, your business really isn't sellable. Often they are shocked to hear this. There are lots of other fun little surprises that clients sometimes get to hear about the value of their business or some of the challenges that they will face in selling it. Many of these challenges can be avoided with some planning ahead. I'm going to go over some of the things that make a business sellable and attractive to a potential buyer. My hope is that if you decide to sell your business one day, you can start thinking ahead and make some changes if needed. When it comes time to sell your business, I want you to have a business that's sellable and attractive to buyers. Here's some things I'm going to talk about today. Profitability, good books and records, a turnkey operation, separating yourself from the business, customer concentration, and cutting unnecessary expenses now to avoid having to explain them away later. Profitability. The first one may seem obvious, but I believe it's the most important thing that will make your business sellable. Businesses that are profitable and flourishing are very attractive to buyers. Sometimes when business owners decide to sell their business, they back off in running it and they spend less time and effort with it. This is the opposite of what you should do. When you decide to sell your business, I suggest finding a very good, aggressive, and motivated business broker to sell it for you, and spend all of your energies running the business and keeping the profitability up. Let me tell you an unfortunate but very common tale that I experienced as a business broker. The seller lists their business for sale with me. We work very hard to put it on the market, and we're engaged in efforts of finding buyers and getting buyers through the process. Mr. or Mrs. Seller backs off of their efforts in running the business. Then we have a buyer maybe that's very interested, but perhaps the process is taking a little longer than expected. The buyer asks for updated financials. These updated financials show a decline in performance because the seller relaxed their efforts or maybe even stopped running the business. The buyer gets spooked and is no longer interested. New buyers are less interested because all of a sudden this business that was performing well is declining. The seller decides to lower the price to gain more interest. Finally, the seller ends up selling their business for less than they had hoped for, or they never end up selling their business at all because they never adjusted their price in proportion to the decline in revenue. Buyers are not typically very excited about businesses that are declining. Let's look at a contrary example that I run into a lot. A seller lists their business for sale, and while we spend a full-time effort selling the business, they are spending a full-time effort keeping their business going strong. As buyers get updated financials, they're excited to learn that the business is doing as well or even better than expected. More buyers become interested. Competitive offers come in. Maybe full price offers or even over full price offers are submitted due to the competitive nature of this business that's growing. Which situation would you prefer? When you're ready to sell your business, think of it like a race. Put in that extra effort at the end of the race to keep your business going strong. You will likely end up with a higher chance of selling and perhaps more money in your pocket at the end. Number 2, good books and records. I believe that keeping accurate and well-documented books and records is the second most important thing that you can do to make your business sellable. The first business that I ever listed as a business broker was a restaurant that was doing quite well. Unfortunately, it never sold because the owners kept terrible books and records, and they were taking cash under the table and not reporting it. Their financials looked awful. The business seemed to be doing very well, but they couldn't prove it. Imagine that you're a buyer and you've submitted an offer and you're in the process of due diligence and the financial records are missing and they're all over the place. You're unlikely to move forward. If you're thinking of selling your business, clean up your books and records. Perhaps consider getting a bookkeeper, and if you're not reporting your income, start doing it. Of course, you should be reporting your income anyway, but if you decide to sell your business, most buyers are going to want to look at the tax returns for the past 3 years or so. If you're aggressive in your deductions, that's easier to explain to a buyer than unreported revenue. If you purchased some equipment that you never used or a business vehicle that's non-essential, most buyers can understand and will accept those adjustments to your tax return numbers for the purposes of valuation. However, if you're going to be hard-pressed to gain the trust of a buyer if you tell them, "I lied on my tax returns." So start cleaning up your books. Number 3, a turnkey operation. Buyers are interested in businesses that are turnkey. In other words, ready for them to take over. If you're interested in selling, put processes in place that make it easy for a buyer to take over. If you don't have some kind of SOP, standard of practices, or some kind of manual that explains the processes that you and your employees use to run your business, then I would suggest putting one together. A buyer needs to feel that they don't need you to run the business. Ask yourself how comfortable you would be taking over your business if you were coming into it as a new buyer, and then start implementing those things. Number 4, separating yourself from the business. It is much more difficult to sell a business that can't be separated from the owner. Look at your operation and imagine what it would be like running without you. Are your clients calling you on your cell phone? Is their relationship with the business only dependent on their relationship with you personally? Are your customers attached to you personally? If you left the business, would your customers still use the company? Are you personally doing all the sales? Do you have specific knowledge or skill sets that are unique to the success of the business? In other words, is the business just you? If so, fix that, because a buyer isn't going to want to buy a business when its success is dependent on the previous owner. I'm selling one of my own personal businesses right now, and that aspect of it is super easy. In fact, it's one of the attractive things about the business I'm selling. None of the customers even know that I exist. The staff do everything, and we have processes in place. Very easy for this buyer to take over. If you have this problem, start introducing your clients to your other employees. Get people in the company involved in the selling and fulfilling process besides you. See if you can get to the point where your customers aren't really going to care or notice too much if you end up leaving. Each business is different, and you know what the issues are with your business in this regard. So start making some of the moves to gradually solve this issue. Number 5, customer concentration. If a high percentage of your revenue comes from one or a small number of customers, you have a potential customer concentration problem. Maybe those relationships are secure and you don't feel like it's a problem in your mind, but a prospective buyer will be very nervous of this. They're paying you a price based on your business profitability and performance. If that customer leaves, all of a sudden, they overpaid for your business in their mind. They will think of it as money gone down the trash. They might have an SBA loan that they used to purchase the business, and now they can't make payments on the loan perhaps. Buyers view a high customer concentration as a big risk. In these situations, buyers often give creative offers that might have some kind of earnout or performance-based payout for the business. If you're looking to be cashed out of your business, this could be a real bummer for you. This is a tough problem to solve because you definitely don't want to lose your big customer, but you might want to consider how to lower your customer concentration by getting more customers, or when it comes time to sell, realize that you might be asked by a buyer to consider some kind of creative way to get the deal done that lessens the buyer's risk. You might want to even consider a purchase price that includes some of these types of creative situations. Number 6, cutting unnecessary expenses now to avoid explaining them away later. If you're a business owner that doesn't run your business very lean, you might want to put some effort into doing this, or it might affect your business value when it comes time to sell. Let me give you an example. Let's say you do some advertising that really isn't very effective. It doesn't affect your sales at all, really. You just throw money at it anyway. Well, when it comes time to sell your business, you're going to want to prepare an adjusted income statement that makes a note of this expense, telling the buyer that it's an unnecessary expense and it doesn't affect your sales. If you can convince a buyer that it's an unnecessary expense, it would show that adjusted profit higher for the purposes of valuation. A buyer has no way of knowing whether or not any sales came from this wasted advertising. So they can't really consider it an add back or an adjustment to the expense. Those advertising dollars may have been wasted, but now those wasted advertising dollars just lowered the value of your business. If you're looking to sell your business in the future, I would look at how you spend your money and get rid of the waste. There are items that you spend money on that are legitimate add backs into the profitability from a valuation standpoint, but some expenses are unconvincing. I'll be doing a video that covers this more. Okay, those are some of the main considerations in making your business more sellable. These are great things to talk to a business broker about. Feel free to reach out to me if you have any questions. My team and I would love to help you sell your business. You're going to be hard-pressed to find a better team of business brokers anywhere than us. You can reach out to me on my website or in the description below. Thanks so much for watching and have a great day.